Japanese and Swiss moves to tame the yen and the Swissy show renewed tension in the forex market, as a struggling US economy continues to weigh on the dollar. With me now is Matt Foster-Smith, a senior currency analyst from Thomson Reuters IFR Markets. Matt, this week the SNB surprised the markets by cutting interest rates to rein in the Swiss franc. What's your thoughts on the decision, and has it adjusted your forecast for the Euro Swissy over the next year?
Absolutely. I mean, the news itself did come as a shock. However, in the grander scheme of things, it isn't a massive shock to the system. We have been expecting the move from the Swiss National Bank for some time. It was just the timing of the actual move itself that threw markets. The Swiss franc has been strengthening against both the euro and the dollar for some time now, hitting all-time highs against both currency units for quarter on quarter. We at IFR were expecting such a move. However, now we've had to readjust where we go from here. We're in a bit of a holding pattern now, unfortunately, until we can see some more information from the SNB over what the next policy move is going to be, whether we go to negative interest rates or whether we go to an intervention situation.
It's the second time this year the Bank of Japan have intervened in the forex market to halt the yen's appreciation. At the moment, where do you see the dollar-yen going in the short, mid and long term?
IFR was caught slightly off guard in that we did not expect the BOJ to come in as aggressively as they did. We did expect the BOJ to come in. Many people were looking for 75, 76.20, 75 to be defended. Certainly not as high as they've come. And when they did come in, market rumours of around £1 trillion today. Whether that proves out to be true or not, only time will tell. Our longer-term forecast for the BOJ and the yen, given the easing that we've seen in policy, we think that the yen might consolidate in the short term, but in the longer term, individual interventions don't have a tendency to work, so we still see the yen appreciating in the longer term. So dollar yen, we still see it back down at 70 going forwards and potentially lower.
And what about the pound dollar? What can we expect to see happen to the cable over the coming months and indeed over the next year?
Sterling's had a very easy ride over the last few weeks compared to, comparatively speaking, to other currencies. The euro debt crisis, for example, Sterling's had a very, very easy run. It's been supported. There's been outflows from Europe into sterling. You've had all the debt crisis, the sovereign ratings crisis. Yes, the UK economy has been underperforming compared to estimations pro rata, but the UK economy is performing well, so sterling should continue to perform well. Cable, we're looking at cable in a 1 year time frame to be back above 175. In the short term, yes, there are pressures on sterling, but that's purely from being dragged lower with the euro.
Thank you, Matt. There'll be more targets in focus coming your way throughout next week, but for now, goodbye.